Boustead Holdings will be building 5 littoral combat ships for Putrajaya instead of 6 at a higher contract cost of 11.2 billion ringgit versus the original price tag of 9.13 billion ringgit. In a filing with the local bourse, the group said its 68.85% owned subsidiary, Boustead Naval Shipyard or BNS, has inked a 6th supplemental contract with the government with regard to the construction of the vessels. Under the deal, the duration of the contract is extended, with the first vessel to be delivered, fully tested and trialled in August 2026 and the 5th vessel in April 2029. Boustead Holdings Chairman Datuk Nazim Rahman said various preventive measures have been put in place to ensure the ships will be delivered on time and within the allocated budget. He expressed his confidence in BNS's ability to complete the project, saying the governance within the company has been improved significantly in the past few years since the project was put on hold. Meanwhile, Defence Minister Datuk Sri Muhammad Hassan said the Ministry of Finance has established a special purpose vehicle to take over Boustead Naval Shipyard as a subsidiary. He said the project will continue to be overseen by the Project Monitoring Committee, which is jointly chaired by the Secretary-Generals of the Treasury and the Defence Ministry. The MACC said it is looking into allegations of corruption involving state oil firm Petronas and an international oil and gas company. The anti-graft agency said today Petronas has given its full cooperation in the investigation involving a project worth 399 million ringgit in Sarawak. It said it had found several weaknesses in practices, systems and work procedures in its probe and proposed improvements to standard operating procedures as preventive measures. The MACC did not identify the project or the international oil firm. It called on parties with information on the case to come forward. Earlier this month, a web portal questioned Petronas' decision to award a contract in 2021 to a UK-headquartered outfit, which was allegedly scandal-ridden and barred from bidding for contracts in the UAE. It urged the MACC to probe the company's top management. Malaysia's inflation continued to ease in April, growing 3.3% from a year earlier as forecast by economists polled by Bloomberg. This after consumer prices rose 3.4% in the previous month, moderating from 3.7% in January and February. Core inflation eased to 3.6% in April versus 3.8% in March. The Department of Statistics Malaysia said restaurant and hotel rates, prices of food and non-alcoholic beverages and transport costs rose at a more moderate rate last month. The maximum price scheme implemented for the month's festivities also eased inflation to a certain extent, with food at home prices moderating, while the Menu Rahmah initiative helped the food away from home segment. 9 states recorded inflation increases below the national level, with Kedah and Labuan reporting the lowest increases, while Putrajaya, Sarawak, Selangor, Pahang and Perak saw consumer prices soar above the national inflation rate. RHB Bank saw its first quarter FY 2023 net profit surge 31%, largely thanks to higher non-fund-based income and lower expected credit loss. Its latest quarterly earnings totaled 761.67 million ringgit on the back of a 39.6% jump in revenue to 3.92 billion ringgit. Non-fund-based income was up by 39.7% to 534 million ringgit, while net fund-based income declined by 6.6% to 1.37 billion ringgit. Net interest margin stood at 1.9% against 2.16% the previous year. RHB Bank Group MD and CEO Muhammad Rashid Mohammed said the group remains focused on strengthening its balance sheet and will continue to uphold its strong capital and liquidity positions. He said the lender is on track to achieve its 2026 aspirations under its sustainability strategy and roadmap, with a cumulative achievement of more than 14 billion ringgit in sustainable financial services, equivalent to 73% of the group's 2026 target of 20 billion ringgit. RHB Bank's shares settled unchanged at 5 ringgit 46 cent, valuing the group at 23.4 billion ringgit. Malakoff Corp sank into the red in the first quarter of FY 2023 on higher fuel costs and lower share of profit from associates and joint ventures. The water and power producer reported a net loss of 99.1 million ringgit from a net profit of 27.48 million ringgit a year ago. Revenue for the quarter rose 21.3% to 2.28 billion ringgit, thanks to higher energy repayments recorded from Tanjung Bin Power and Tanjung Bin Energy, underpinned by higher applicable coal prices. On its prospects, Malakoff says it is expecting challenges to its overall performance and noted that coal prices are beginning to moderate as demand falls following the EU's growing reliance on renewable energy and alternative countries for its energy sources. Meanwhile, the group has secured new rooftop solar projects with 2.77 megawatt peak and has entered into a share purchase and subscription agreement in relation to 3 hydroelectric renewable energy plants, adding 84 megawatts in capacity to its renewable energy portfolio. Malakoff closed 0.75% higher at 67.5 sen for a market capitalization of 3.35 billion ringgit.